To become truly wealthy, it's not about having lots of money in the bank. Truly wealthy people own financial assets. And it's also very important that our financial assets stay ahead of inflation. Now, when it comes to inflation, the official measure is the CPI, the Consumer Price Index. And even though the CPI has spiked to a rate of over 4% per year, this doesn't actually reflect the true picture. Raoul Pal recently released a video discussing what is actually going on with inflation and why what's going on with inflation doesn't show up in the CPI, and why we need to take a look at what's going on behind the curtain. So in this video, we're going to take a look at what's actually going on and why if your investments are not going up by at least 20% per year, then you are in fact losing out to inflation. So we'll be looking at why prices can be misleading, the secret inflation of 20% that's actually going on right now, and then how to protect yourself and actually stay ahead of true inflation. As always, if you do find anything useful in the video, drop a like. Always appreciated. Okay, so first up, many times what's going on the surface is not what's going on behind the scenes. We have actually been conditioned to look at things how they're priced in dollars or whatever your local currency is. And this means when we look at asset prices, they look like this. Here we have the stock market, the S&P 500, and we're looking at a 5-year period. And you can see this is the growth line that you want to see. Yes, we've had some crashes along the way, but measured in dollars, everything is looking exceptionally good. Now we have house prices. Medium house price sales for the United States, and the trend line looks very similar. This goes back to 1965, and you can see just steady, consistent growth. And if you invest in properties, this is exactly what you want to see. Currently setting new all-time highs. And even the gold price is looking pretty good. So again, a great growth trend. Yes, we've had a bit of a pullback over the last year, but for a 5-year period, still gold is looking really good. So we are always measuring these things priced in dollars. And when priced in dollars, they actually look quite good, right? But to understand what's going on behind the scenes, we have to look at asset prices measured in other things. And this can be very revealing. As you may be aware, the Fed is creating currency at a rate never seen in history. And in the last few years, the currency creation has been closer to 20% per year. And it's this expansion of currency that we need to keep an eye on. Let me show you what I mean. Let's measure the same things, but this time we'll measure it against the Fed's balance sheet. Take a look. So this time again we're looking at the S&P 500, but this time measured against the Fed's balance sheet. So this takes into account all of the currency printing that's been going on, and this gives us a very different picture. So now you can see it actually crashed from 2008, 2009. It's been pretty much going sideways for many years. We then had the pandemic crash, and this is where we're at today, but a very different picture. And how about gold? Again, it's a very similar picture. It crashed from 2008, a bit of a rally for a couple of years before another crash, going sideways, another crash, and this is where we're at today. And house prices, a similar picture. Again, we had this 2009 crash. It's been coming down and going sideways for many years. Another crash from the pandemic, and this is where we're at today. But again, now you get to see a very different picture. All of a sudden, these assets don't look quite so good, right? And this shows a very different picture to what we've been conditioned to look at. Okay, so let's hear from Raoul to explain exactly what is going on. Take a look.
Now, what's so cunning about this strategy, it doesn't show up in the bond market. And even if it does, it gets hidden. It doesn't show up in CPI because it doesn't change the cost of computers or TVs or food. It doesn't do that. It doesn't show up in things that look bad. The equity market goes up, hurrah! It's not obvious to people how they're getting screwed, but everybody knows they're getting screwed. It's the change in the denominator, the devaluation of fiat currency overall, that means you cannot buy as many assets as you could, and therefore your structural savings are worse.
It means we cannot buy the same amount of assets as we could. So in fact, we're actually worse off. So getting into the habit of measuring things not just priced in dollars is a valuable thing to do. And so the question then becomes, okay, so what do we do? The Fed is debasing currency at closer to 20% per year. So how on earth do we stay ahead? Well, I'm glad you asked. Check it out.
Now, with record low interest rates, you now have no chance of making money. Well, not until Bitcoin turned up. Bitcoin was the game changer. The supermassive black hole that people were going to realize was going to suck everybody in. And it is definitely going to form this basis of the financial system because it is pristine collateral. The collateral where, right now, collateral for the whole market is US Treasuries. But bizarrely enough, you can just create more of them. So why would I hold your collateral if you keep creating more of it and the yields fall? So I get rewarded less for lending out my collateral to you? Why should I? Bitcoin, entirely different. The structure of Bitcoin means that you can't create more of it. So as a piece of collateral, it's extremely valuable. It's also a fantastic store of value because of the limited supply and all of the other parts of it, the robustness of and distributed network. It's an incredibly powerful technology that we all kind of know by now.
So, lucky for us, we have seen the birth of a brand new asset class, Bitcoin and other crypto assets. Now, whether you like Bitcoin or not, whether you agree with Bitcoin or not, Bitcoin has become a huge financial disruptor, which we cannot ignore. And even after crypto's massive recent crash, crypto is still up almost 93% on the year. Okay, so let's look at these charts again, but this time we're going to look measured in Bitcoin. Check it out. So this is Bitcoin measured against the Fed's balance sheet, and now we see a very different picture. This is actually something that's performing very well against the Fed balance sheet. This is the stock market S&P 500 against Bitcoin. And again, you can see stocks are underperforming against Bitcoin and actually coming down to all-time lows. Same picture is true with gold. Gold has been crashing against Bitcoin and coming down to all-time lows. Same picture for real estate. Real estate has actually been coming down and setting all-time lows against Bitcoin. So the one thing saving the day against the huge currency debasement going on is crypto. It's the one thing still staying ahead of the Fed's money printing. And this isn't just this year, this is year after year after year. And people may say that investing in Bitcoin is risky, and it does have some risks for sure. But do you know what one of the biggest risks right now is? Not owning any crypto. Now, Michael Saylor is a tech entrepreneur that has probably spent more time than anyone studying Bitcoin. And here is a great summary of his research.
So if we look at the history of money, we've gone from commodity money to coinage of those commodities, to notes represented by that money, to fiat currency, and now we have cryptography as a basis of money. Ideal money, if God came down and God waved his or her hand and created the ideal money, it would be based upon Luca Pacioli's modern accounting principles of double entry accounting. And perhaps you could define 21 million units that are infinitely subdividable, trillions and trillions of times each. You could maintain that in magic space, and then you could settle everybody's trades instantly everywhere on Earth, everywhere in the universe in a fair and equitable fashion. That would be a good money. We could call that God coin. Well, the next best thing that we've invented is, as humans, is Bitcoin. So Bitcoin's the most efficient monetary system we've yet to implement successfully. It's 21 quadrillion Satoshis, 350,000 transactions a day. It cost about 10 basis points of the monetary network to clear those transactions and to secure the network. And it stores the value and provides security to everybody on the network effectively for free after those transaction fees. Bitcoin's the most disruptive force in the century. In 12 years, it grew to $1 trillion in monetary value. That beats Google, Facebook, Amazon, Apple, and the like. That's the market sending us a message. Money is collapsing. We've got a massive inflation problem. We're losing 1% of our value in currencies every single month. Bitcoin is a solution. It is spreading at more than 200% a year. We're adding 3 million users a week. It's accelerating.
So whether you like Bitcoin or not, whether you agree with Bitcoin or not, the disruption going on right now is real. It took just 12 years for Bitcoin to get to the $1 trillion mark. That's faster than Amazon, faster than Apple, faster than Google, faster than Facebook. And that is the marketplace made up of millions of people from all around the world making that happen. So to sum up, to become wealthy, we need to acquire assets. However, we need to be careful just measuring assets priced in dollars. Asset price inflation doesn't show up in the CPI, and the Fed's printing of money is hiding the true value of assets. And the one thing that's actually staying ahead, and that's even after one of the biggest crashes, is crypto. And one of the new emerging risks right now is not owning any crypto. So there you are, guys. Hope you found this enlightening. I'll link Raoul's video below, and that's well worth a watch. For now, if you did find anything useful in the video, be sure to drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, I invite you to click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.